We are going live. It's exactly 10:30, so we're going to ask you to please watch the screen. It's going to be a panel discussion, not even a panel discussion, but rather a conversation between two powerful women. Let me briefly read their bios. The first lady is a lady by the name of Lizzy Mogale, Managing Executive for Insights and Advisory at Nedbank. Lizzy Mogale is the Managing Executive for Insights and Advisory at Nedbank, where one of the key focus areas is helping the bank find growth and opportunities to create a sustainable and competitive business. We've traveled with her for the last 3 years. There's 3 things she loves. She loves women empowerment, she loves the township, and she loves township businesses. Right here from Limpopo. Kupakishapeleng Lizzy Mogale matsoho. Fantastic. And then the next one is a very powerful lady as well, Maryanne Ochola, Managing Director at Endeavour, Kenya. She's passionate about high-impact entrepreneurship and its impact in transforming local economies in Africa. She has a combined 2 decades. 2 decades is 20 years of experience. In our culture, but indlela ibuzwa kwabapambili. Those who have gone ahead and those who have knowledge, and that's what she has. In commercial banking, investing, venture capital, and has a deep understanding of evolving entrepreneurial ecosystem in Africa. So that's a brief bio. If you combine the experience together of these two powerful women, give 40 years of knowledge and experience. And I think there's a lot that we can learn from them, right? They're tuning in from wherever they're tuning in from. We want to show them love and say thank you so much for joining us. Please watch the screen. Ladies and gentlemen.
And what that is all about. So Maryanne will be talking to us from a perspective of a funder. To say, as funders, what are they looking for when they assess and they look at, you pitching your business and looking for funding. So Maryanne, really lovely to connect and chat with you. Maryanne is joining us all the way from Kenya. Hi, Maryanne.
Hello, thank you for having me. And Jambo, as we say in East Africa.
Jambo. Thank you so much. So Maryanne, we only have limited time and there's so much that I want to discuss with you. So I'll jump straight into it, right? In terms of, today we are talking about, managing your money as a business. And we do know that funding is part of managing money as a business. So maybe just to kickstart the discussion, Maryanne, maybe just talk to us about, the different types of funding that is available for, for entrepreneurs, and what this funding are all about and what are the requirements, just to kickstart this session and discussion.
Thank you, Lizzy, and thank you for that question. Allow me to first start with types of businesses, because different types of businesses require different types of funding. So we think of businesses in 4 buckets. The first bucket is a livelihood-sustaining business. A livelihood-sustaining business is part of a traditional value chain. So you probably run a spaza shop, so you're part of a retail industry, or you run a transport business. That is a livelihood-sustaining business. The types of funding that business needs is a personal loan. Sometimes you take it as an entrepreneur and then you fund your business. It is working capital, which you take from the bank or from other sources to buy stock, or it is asset finance, which you take and you buy your truck or your taxi. The second type of business is a dynamic venture. A dynamic venture is usually moderate growth. So it is not small. It is growing 20%, 30% year on year. And you're focusing on increasing market share, but it's a bread and butter business. So you're probably processing tomatoes. You're taking them from farmers. You're turning them into pulp. You're sending them to a supermarket. Now, the type of funding that business needs is debt, because you have cash flows, so you can service debt. But the business can service the debt, not you as an entrepreneur. It is working capital. And if you're big enough, it is private equity, or it is a strategic investor. Now, the third type of business, and it's important for you to know what type of business, so you don't take the wrong type of capital. The third is a niche venture. A niche venture, you're selling something unique. You're selling it to a very locally focused market, and you have a strong identity. Think about fashion. You know, you're running a fashion line. Think about a chain of coffee shops. It has strong social impact. You're thinking about the mamas that are, making the fashion. The type of capital you need is from your friends and family. They believe in you first, so they invest in your business. It is angel investors, it is impact investors, and it is a business competition. The last one is a high growth venture. Here you're running a business that is going to become 100 times. Think about Sweet South in South Africa. Think about Paystack. Think about Time Bank. Those are high growth ventures. The type of capital you need is venture capital. You need commercial loans and you need strategic advisors. So Lizzy, I'll stop there.
Awesome. No, thank you so much, Maryanne. I think you've laid it down for us to say there are 4 types of businesses. Be very clear around the type of business that you have. It's either a livelihood, business, dynamic venture business, niche venture business, and high growth, business. And depending on the type of your business, this will determine the type of funding that you would require. I know a lot of businesses here, focus a lot on debt finances, but debt financing versus equity financing. And maybe just explain to say, what's the difference between debt financing and equity financing, and grants, because these are 3 different, options, just to explain the different types of funding.
Okay, let me start with grant. So grant is money that you're given with no expectation that you will pay back. But the grant is given because the mission that your business is working on is aligned to the mission of the grant maker. So let me take an example of Nedbank. I know your typical financing will not be, grant, but you might want to expand financial inclusion in the townships. So you might say, if you're running a business that is creating financial literacy amongst people in your community, we will give you a grant so that you can expand your reach. So yes, the money will not be paid back, but you have to fulfill the purpose that the grant maker has given you this money for. Now, you also need to do reporting on that grant. How many people did you train? How are they doing 6 months later, 12 months later? That is what the grant maker is interested in. Debt, there is an expectation that you will pay back this money, and there is also a cost. So think about it as somebody has sold you money, and you will give back that money with a profit. You will also pay that money over a prescribed period of time, 12 months, 24 months. You will pay that money in equal installments, which will include the principal and the interest. For you as an entrepreneur, what you want to consider is your business generating enough cash flow for you to be able to service the loan repayments? And are you making enough profits to cover the interest and also to remain with some profit for the business? So that you must be very clear when you're taking the debt. The third amount is equity. When somebody gives you equity, they are buying a piece of your business. They are saying that, Lizzy, I really love your business. For 25% of your business, can I give you this amount of dollars? You're not expected to pay that money now, but you're expected to grow the share of that business enough such that when I take back my money 5 years from now, 10 years from now, I will have made profits. So that equity amount will be 3 times, 5 times, or 10 times. It is also very risky because that business might not be there 3 years from now, 5 years from now. And the equity givers know that. So that's why they say, I need you to at least give me 3 times more so it can cover for that risk.
Awesome. Thank you so much, Maryanne, for laying that out clearly for us. For us as banks, we have sometimes a challenge that entrepreneurs are treating, debt as grant. they don't want to pay us back. And I think I'm glad that you've explained, around this different, aspects. And we'll get to some of the advantages and disadvantages of these different types of, of funding for, for entrepreneurs. And I think maybe in bridging to that, let's also start about the entrepreneurs are sitting in the room. They're like, okay, now that I understand this three different types of funding, what makes a fundable business from you guys as a funder? And maybe you can also bring in a bit around what Endeavor do, so that the entrepreneurs know. Then explain to us, say, what would you look for when businesses come and pitch to make it a fundable business?
So there are a number of things that investors will look at, but I will talk about the basics, the ones that every funder will for sure think about. So the first is, what is the problem that you're solving? And is there a market large enough for you to actually build a business of? So if, for example, I speak for myself in Nairobi, there are so many people that walk to work every day. So if somebody tells me that they will be selling food to commuters, I know that there is a market there. But if you tell me that you're starting a business for walking dogs, not very many people in Nairobi have dogs. So there is no market. And so for me, that business is dead on arrival. So the problem that you're solving, is the market large enough? And are you able to demonstrate that you have at least captured some of that market? You have a few customers, they are paying, and how much, and not just your family and your friends, but that the solution has captivated people and they are paying for it. That is one. The second is the product. We might all agree that there is a problem to be solved, but as entrepreneurs, we are approaching it differently. Some of us will say, oh, I will package small pieces of pap because people can afford small pieces. Some people will say, oh, I will have a mobile app so that people can order, and then on their way to work, they can find the pap ready. Some will say, no, I will actually build a restaurant so that some people can rest as they eat. Which of these products is the most unique or the most attractive to your market? So it's not just the problem, but also how you have packaged the solution. So what is the product? The third is, who are you as the founder? And why are you the best person to solve this problem? What is your background? Have you been a commuter before? Have you had this problem before? And who is your team? And what is their background? So if you tell me you're solving for food, but there's nobody in that team that has ever worked in the food industry, I will have question marks. How well do you understand the industry? Then the final one is, when I think about the future, where is this business going? Do you want to build a business big enough so that you can sell it? Do you want to expand to 12 towns? What is your plan? What is your vision for the future? And therefore, what is my exit opportunity as an investor? So at least those 4 things, you should be able to communicate them very, very clearly. Now, in terms of what we do as Endeavor, we work with entrepreneurs who have already gone past the startup phase. They have already built a business, it is thriving. Now they want to scale it up. So that business is in Kenya, it wants to go to Uganda, it wants to go to Rwanda, it wants to go to South Africa. Or that business is in South Africa, it wants to go to the US. So once you've overcome the startup phase, we come in at the scale-up phase to offer access to market. You're going to Nigeria, oh, we know people in Nigeria. You're going to Egypt, oh, we know people in Egypt. To offer venture capital, if you're an Endeavor entrepreneur, we will also invest in you. And to offer access to talent. For you as a founder, how do you continue to scale yourself as your business grows?
Oh, thank you so much, Maryanne, for those 5 points that you mentioned. And I think our pitch team have displayed some of the things that you're talking about. What is the problem that you're solving for? Is there a big enough market for what you are, producing? Demonstrate ability to make money. Do you have customers and are they paying it? Show it. Don't say I plan to. Show us the customers that you have and that they are paying for it. What's your product or your service that you're offering? and your business model, right? How are you running your business? How are you making money? How does it help you to make money? Most importantly, who are you and who is in your team? And does your team have the right skills that are required to sustain this business? Because investors are looking for business growth so that it can grow the equity, that they have. And I like the last part that sometimes people don't think about it. What is the exit opportunity for the funder? That's what they would always be looking for, to say, what is our exit opportunity? And I assume even for the entrepreneur, you also need to be clear, what will the exit opportunity for the for the funder look like? So we've looked at what you look for as a funder. So let's flip the coin a bit to say, a small business that wants to approach a venture capitalist, what should they also look at to assess whether the funding option that they are providing them is a good one, and they should consider it, especially if they are assessing between different types of VC capital ventures?
Great. So as an entrepreneur, as you start to think about capital, so first you need to have built a business that already has traction. I know we say, sometimes we say, I have an idea. Can you fund it? A lot of funders we have a few incubators, university-based products, university-based programs that are going to help you develop an idea to a business. But most funders want you to already have demonstrated that you have a business, there are paying customers, there is what we call traction. So first, you need to be able to demonstrate traction and to be able to understand your business inside and out. I know some of our entrepreneurs, your background may not be finance, but I need you to tell me, how much does it cost you to make this product? How much do you sell it for? What is the profit margin? What are basically what we call unit economics? For every unit, whether it's something that you're selling, whether it's a service that you're offering, what are the input costs? How much are you selling it for? And how much money are you making? And can you scale that up? So that's the first thing. Demonstrate traction and understand your unit economics. Then once you do that, what is your plan for growth? Are you planning to build a factory, buy a truck? So understand, what is the use of funds? This money that you want, what is it for? Because once you can tell that, then you can know who is the best type of funder to approach. So if you're looking for working capital, I want to be able to buy raw shea butter so that I can make lotion. What you need, you can go to a bank and you can get what we call working capital. Buy raw material, turn it into a finished product, sell it, pay back the bank. But if what you want to do is buy machinery, maybe you want an asset finance provider because they can buy that asset for you, you own it together until you finish paying. Maybe you want to expand to Mozambique, to Angola. There you probably need equity because you do not know how Mozambique or Botswana will turn out to be. You might need to come back. You might need to reconsider your strategy. So the use of funds is what should inform the type of funder that you will go for. Then, so I've established, I need working capital. Why should I go to First Rand Merchant and not Nedbank and not? So you also need to ask other entrepreneurs, what was your experience with Bank A? What was your experience with Bank B? Do they treat their entrepreneurs well? What is the interest rate? Who is cheaper? So you also need to do your research. Even when you've narrowed down that you need debt, you still need to do your research and talk to other entrepreneurs who have borrowed or got equity from this. And then make it a conversation. Make it an interview. I am interviewing you to know if your business is good, but you're also interviewing me to know if I will be a partner. And if you feel your vibes, it's like dating. If you get into a marriage and it doesn't work, you will end up losing more in the end. So take your time.
Oh, Maryanne, you're throwing pearls right there, and time doesn't allow us to dig deep, but I think it's giving, quite a good base and quite a good sense. I really liked what you say, to say the use of funds determine the type of funder you should look for. And I think for the entrepreneurs in the room, for the entrepreneurs online, I think that's the golden line for today, to say, always be clear around what is the use of these funds and what's the type of funder that you should look for. I mean, one of the things that we see is a lot of businesses don't actually consider equity funding. They mostly default to, to debt funding. And I hope today it has triggered the appetite and the insight to say there is another option of equity funding. And maybe you can talk a bit around angel funding. I mean, you've done a lot on impact funding. Entrepreneurs in the room who probably might consider impact or angel funding, how should they go about it? What is it and what does it entail and how should they go about it?
So when you think about equity, it's a broad bucket. But if we went deeper into it, it starts with your angel investors. Your angel investors is usually your first check. It's probably an individual. It's probably a colleague, a family member. It's an angel network. So in Johannesburg, for example, we have the Josie Angel Network. And what they do is they write small checks for early stage entrepreneurs. So what you want to do is do some research. Who are the angel networks in your town? Who are the perhaps high net worth individuals who want to invest in small businesses and see how they grow? And when you go to an angel investor, you're pretty much selling the same story. What is your business? What is your traction? And what is your market size? How big is this problem? So you still need to sell a big vision. Now, what an angel network does is they will offer a check, $5,000, $10,000, $20,000. They will buy a stake in your business, or they will invest in what we call a convertible note, which is money that they give you now because they know you might not have a valuation for your business yet. But in the next price round, where you will have a valuation, it will convert to equity, or they might choose to then take their money out. But they give you a coupon rate. A coupon rate is at least a percentage of interest that when they take their money out, they will take it with. But the key advantage for angel investors is that it's not just their money that you're taking. So if Lizzy gives you $2,000, it's not just the $2,000. She's opening up her network to you. You know, you want to get your products into Woolworths. She's trying to see who does she know at Woolworths, so that she introduces you to them. You want to go to Mozambique. She's calling her colleagues in Mozambique and asking them, tell me about the regulatory environment in Mozambique. This entrepreneur, can you talk to them for 5 minutes? So an angel gives you a small check, but they also open up their network and their knowledge so that they can help you grow. And it's good to start with angels before you go to institutional capital, which is now the VC firms or the private equity firms.
Maryanne, time is not on our side. I really want to unpack this a bit more, but I think now it's high level so that people can go dig a bit into this. And maybe one last question before we take questions on the ground, specific, and maybe be ready to get questions on the ground. And I liked what when I first saw you at the summit, you also talked about how sometimes the type of funding that you use could impact your future funding requirements. Maybe talk to us a bit around that. I liked how you also used grant funding and how sometimes it may be perceived as you go out to grow your business and you build on it. Talk to us a bit around how people should be cognizant about the type of funding, how they use that funding, and what it could have an impact when they look at the future.
Yeah. And in particular to grant funding, and what I was referencing on the panel in Kigali, Lizzy, is around how sometimes entrepreneurs take too much grant, that it becomes difficult for a commercial investor to come in later because they see you've taken all this free money. So is there an underlying business, or have you just been subsidizing, with what some would consider free money? So what I would encourage entrepreneurs to think about is, by all means, take the grant because it helps you in the beginning, but use it to test the market. Use it for product development. Don't use it to hire 5 people, 10 people, because if you do that, you're not going to be able to sustain that, right? So use it to a sort of R&D. Big companies have R&D budgets. You don't have an R&D budget as an entrepreneur. Use this as that. Test a new product, test a process, test a new market. And then once commercial capital comes in, the fundamentals are being funded by customer revenue, not by grant. So they can see that there's an underlying business model. The fundamentals are right. And that's a smart way to use this grant money. So don't use it to pay big salaries and buy, and rent big offices, because 2 years from now, that will not be sustainable.
No, I thought that was quite powerful, Maryanne, to start saying, even the type of, the type of funding that you get, also be intentional and deliberate about what you use it for and how you use it, because that could impact, the future of what you're looking for. I think we must do a part 2, about this, Maryanne, because we can't cover everything else, in line. So I'll throw one question, then we'll get back to the room to take 1 or 2 questions if time permits. I mean, you do a lot of work. I know you reside in Kenya, but you also do a lot of work on Southern Africa. Maybe is there, we know the Kenyan entrepreneurial ecosystem is alive, is vibrant. Any nuggets you can share with South African entrepreneurs that you've seen that is unique from the Kenyan entrepreneurs that, South African entrepreneurs should also think about, and also what they need to consider thinking beyond the South African borders on what the landscape look like on the other side?
So the first thing I want to say, Lizzy, is that the South African entrepreneurial ecosystem is far, far ahead of because you have a larger market, you have a deeper, financial services landscape. Your policy environment is quite vibrant. So we are actually looking to learn from you. But that said, I think one of the things that I want to really, for us to think about is that there are so many opportunities in Africa. Think about, we're barely scratching the surface, which is why a lot of entrepreneurs who are thinking about growth, but it's, when you capture Kenya, you're already thinking about Uganda, you're already thinking about Ghana. But I want us to think about it intentionally, so that you don't just say, I'm in 6 markets, but it's because you understand how different each of our markets are. So when you're taking a product from South Africa to Botswana, you understand, that these are not necessarily the same markets, and you need to tweak or, your business model, but to still know that Africa is just opening up. So if our politicians, our political leaders, opened up our borders faster, if the Africa Free Trade Agreement moves faster, that there's a lot of business to be done on the continent. And I would encourage travel, go to other parts of the continent, meet other entrepreneurs, collaborate, co-found businesses, because it is entrepreneurs that are going to transform African economies. The one thing I like about South African entrepreneurs is they don't just build for South Africa, they build for the globe. So we've seen a lot of founders in our network. Time Bank is already, in Asia, it's in, so you build for the world. And I think those are lessons that you can also impart for your, peers across the continent.
Oh, love that. South African entrepreneurs know that you are vibrant, you're a blueprint that, other countries are learning from. South African entrepreneurs, they build with the world in mind. And the last part, South African entrepreneurs travel to other countries so that you learn and you understand what happens in other countries, and also collaborate and form partners with those outside South Africa. Really love it. So I don't know, do we have time to take 1 or 2 questions for Maryanne, or have I exhausted all the time?
Lizzy, can you hear me?
Yes, we can
Hello?
hear you. I'm a bit faint, but we can hear you.
Can you hear me?
Yes, we can hear you.
All right, yeah, we've got time for 2 questions. Is there anybody in the room who has a question? There's the first. Yeah? Okay. First hand. There's a second hand. Yeah, in the front. Can you please get them the mic, and please can you, when you ask the question, please can you stand up?
Thank you for the opportunity. I heard you say we, as entrepreneurs, do not have R&D and that we need to travel. Can you please elaborate more on that?
So what I meant is, when you think of a big company like Unilever, if they want to start a toothpaste products. They have a budget to test, to create a toothpaste, take it to a small group, see if they like it, bring it back, say they didn't like it, was too bitter, they didn't like the color, do this, do that, before they finally get the final toothpaste that they take to a supermarket. Now, for most of us entrepreneurs, we are bootstrapping. So we don't really have some free money somewhere to test, to test a product. So if you take a product to the market and people don't like it, coming back to again, change it, and we might not have money to do that. So that's what I'm calling research and development. Researching the market, testing a product, building a new product. So to the extent that you can get a grant to do that, then that's a very good use of funds, because then you're not using money from your pocket or money from an investor to test a product that might not even work, right? So say we have seen that there's a need for a toothpaste for children, for example, because the one that we are selling is for adults and it's affecting children. So let's test one for children, but give us a grant to do that. So that's what I meant. Then in terms of traveling, and I know traveling is a privilege because our continent, it's cheaper to fly from Nairobi to London than it is to travel from Nairobi to Abidjan in Cote d'Ivoire, right? But if you get an opportunity, it might even be a church trip, part of your church, there's a ministry, you're going to Malawi. Take one day before to go and meet entrepreneurs in Lilongwe, to find out what they're doing, to find out what works in that market. Because when I think it's Trevor Noah in Born a Crime who says our dreams are limited by our environment. So when you open up your environment, your dreams as well expand. So when you get an opportunity to go and see how others do things, take it. It might be where you get an idea to bring back home.
Awesome. I love that, Maryanne. And also, if you can travel, there's a lot of online content. Maybe watch pitch competitions in other African countries. How are they doing them? I really like that to say expand your exposure and perspective.
Yeah, we have our second question. Over to you, ma'am.
I can't hear.
Boo, we can't hear the lady.
Is it okay? Okay, thank you. Thank you so much. I loved how financing your managing your finances was broken down into different segments. And now sitting here and as a township entrepreneur, the first question that comes to me, and I'm sorry that the question will be directed to Nedbank. That is because you are our next channel to get finances and to manage our finances perfectly. So, and we know that Nedbank always talks about being more than a bank. And for township entrepreneurs who I think in the room, most of them are formal and informal generally, without strong financial records. And how is Nedbank practically helping the township entrepreneurs transform or transition from being informal without the real financial record to being a bankable business, to attract the real venture capitalists or the big loans from the bank, and also how they can assist, because most of the entrepreneurs, especially in Tzaneen, they mostly receive their finances through grant. And we know the transition of getting a grant and buying the things that don't really need that grant, but we always divert to salaries, we divert to equipments that will need maintenance in the future. So how is Standard Bank assisting them manage their businesses and making sure that the grant they receive will eventually, ideally, assist the business to become a bankable business?
Yeah. Thanks for the question. In the last part, I don't know how Standard Bank does it, but from a net bank perspective, the reason why we actually partnered with T is mainly for that perspective, right? Like the conversation we're having with Maryanne right now, to start saying, building the right skills and having the right understanding and how you manage your money, understanding how you manage your money could have an impact in the long term future of your business, right? And you would see I have intentionally not anchored this discussion on debt financing because a lot of businesses like talking about, debt financing as banks. We don't finance small businesses and all that. I mean, that's a story and a discussion for another day. But today I want to tilt the conversation that you talked about to say, you raise a very good point, and I think that's why I liked this line by Maryanne to say, guys, understand the fund that you get, what you are doing with it, and the unintended consequence of using a fund for something that could have an impact for you a bit later. And I think Charles will, we'll talk a bit later around, how we help small businesses manage the money and all that stuff. But maybe Maryanne, let me just, bring it back, to you to say, for entrepreneurs who are sitting in the room, who are hugely reliant on grants, and they are using grants to run the operations. What do they need to do differently from today so that they gear themselves to attract other different types of funding in the future?
So think about building a business as building a house. You need to build a strong foundation, but you're building a foundation that you might first build 2 rooms on it, but should you want to take that to 4 rooms or to 5 rooms, that the foundation is still strong enough. That's how I want you to think about your business. So if you're taking grants, use it to build the base. Don't use it to build the walls, because if the base is not strong enough, the walls will collapse. So if you're a manufacturing business and you use grant to buy something that is, to do something that is a one-off cost, to pay for a license, for example, that makes sense because you don't need to pay for a license again, maybe next month or the other month or the other month. But if you use grant to pay the security guard at your gate, will you be able to pay for security next month and the following month? So you see, you could have used that money in a way that can multiply or in a way that can set you up for additional growth, or you can use that money to just eat lunch, and yet you will need dinner and you will need breakfast tomorrow. So that's how I want to. So the takeaway here is not that grant is bad. The takeaway here is how you use it is what matters. Use it to do something that will help you grow and will tell a commercial investor, look, I have already covered the bases. I have already tested the product. The licenses are in place. So all you need to do is give me working capital because the foundation is strong. So it's not don't take grant. It's don't use grant to do things that you will still need money to do for tomorrow. That the best source of revenue for that is customer revenue. So customer revenue should pay your salaries, or even if it doesn't pay today, the customer revenue can pay debt or working capital that you used to pay your salaries. That's the takeaway that I want you to have.
Maryanne, thank you so much. I think we'll wrap it here so that we don't talk too much. I know there are lots of questions that need to come, but I really appreciate you coming and sharing around some of the things that sometimes I overlooked from an entrepreneurial perspective. And Maryanne, if people want to follow you, want to see what you're talking about, how can they find you? How can they follow you?
The best place is on LinkedIn, and I am Maryanne Ochola on LinkedIn, and I look forward to connecting with you. And awesome. I wish you the very best in your entrepreneurs are going to transform this continent. Thank you.
Awesome. Great. With that said, thank you so much for your time, Maryanne. I really enjoyed it. I also learned a few things. I mean, there are lots of nuggets. I would encourage the entrepreneur to say, after this session, when you get home, sit down again and listen to this and take notes and start thinking about it, looking at your business and start saying, because this is part of how you manage the money in your business and how you create the right credentials, the right foundation, to choose the right funding option, to prepare the right documents, to know how to pitch your business in a way that you get access to the right funding, and how to manage your money in a way that it does not impede your ability to get the funding that helps you to expand and to grow your business. So, Sbusiso, with that said, I think we'll pause it here. Thank you so much for listening and engaging.
Big thank you so much. Ko ba ba siya palang matso to Lizzy, to Maryanne,